Our first guest says today's spectacular tumble by the Toronto Stock Exchange may be evidence of a Sell Canada program in play. She's Diana Avigdor, Vice President and Portfolio Manager and Head of Trading at Barometer Capital. Good to have you with us.
Thank you very much for having me.
What do you mean by a Sell Canada program?
Well, I'm on the trading desk all day, so I'm going to focus today on the trading color. And we see flows today, evidence of Sell Canada. In other words, you have all these, Canada has been in favor during the commodity boom by global investors that have allocated to Canada. And in the last few months, seeing where copper is and the commodity trade and where the TSX is now, these guys are getting some cash outflows. And the first day that things feel really bad, because markets have been okay, but a little sloppy in the last few days, and today was the first day that it feels really bad. We were seeing some negative flows. We're seeing some flows, hundreds of thousands of shares, like a program, sell the financials. You see sell the energy, just several names coming from the same dealer. You know it's a bit of a program. These guys are getting cash redemptions.
Well, I'm looking at the advanced decline line, and of the 239 members of the composite index, only 25 of them are up. So this seems like an across-the-board selling scenario.
That's right. And you see these programs coming from larger bulge bracket firms that tend to have reach globally. U.S., Europe, and whether it's the financials that are being sold because of profit taking, or whether it's somebody throwing in the towel or getting cash redemptions on the commodity trade, you see both sides of the trade.
That commodity trade, that's an interesting point. It seems like the perception from the world is that the Toronto Stock Exchange is a resource-related market, and that's it.
Right. Well, and the financials held up. Our financials have held up so much better over the course of the financial crisis. But now, there is the feeling that Canada is facing headwinds on the housing side, and so that the financials that have rallied so much might do a little more poorly, relatively speaking. So if you're a global allocator and you're looking at the relative trade, you would now perhaps prefer some of the more global U.S. financials.
What about you, though? Are you buying on the weakness?
Well, so we were, what happens, we were in the financials. What happens in the market rally is that the financials get to be a bigger and bigger proportion of your portfolio as the stock works. Mm-hmm. There is room to trim, but there's no need to take the whole position off. And when you trim, you have room to take advantage of further weakness. This is the first day on the S&P anyway. We don't need to be the first one to sell. If this takes on a new life, then it's possible to pick your spots a little later. Okay.
So you're suggesting that we have to keep an eye out as to whether we're going to see repeats of these days in the coming days, not coming weeks, just days.
Days, couple of weeks. Look, the Dow is up 12% year to date. TSX is clearly underperforming, and that has been a theme. But from a global perspective, if you're a Canadian manager that was able to diversify globally, say U.S., which we are now over 50%, we're in the U.S., so we're able to take advantage of the fact that other markets have done better. You want to watch for maybe a few percent, not just one. See whether there's a bit of profit taking, see whether there is a lull. The macro data is getting a little sloppier. We have been up for 3 months. Give it a couple of weeks and see what happens.
In the meantime, the last time you were on, we talked about consumer discretionary stocks. You like consumer discretionary, at least you did. Do you still now?
We still do. We still do. And you've seen, Barometer is the manager that we buy relative strength. We prefer things that are working now. We don't try and pick bottoms. Mm-hmm. And these are the stocks that have worked. And in a low rate environment, and in an environment where commodities are not doing so well, that actually, and the U.S. dollar is stronger, that actually doesn't hurt these companies. It actually benefits the consumer, and so and the mega caps and the dividend payers, and they're buying back shares, and so the investor has just moved away from the safety of the bond market and the money market into a little bit into equities, and we've seen that rotation from the money market, but into the safest of the equities.
So safety, liquidity, dividends, the three key pillars as we saw on the screen there just now. Scotiabank plays into that for you?
Scotiabank plays into that in the sense that it's a great bank. We like the Canadian banks. Scotiabank also has an extra zinc to it in that it is global, mm-hmm. in Latin America. The GDP growth and the demographics and loan growth in, say, Mexico or Peru are much, much higher than we have in North America. We have GDP at 4% as opposed to 2%. We have loan growth and 6% and up, so we like that.
What about TD Bank? Because now that we've seen that changing of the guard plan for November of next year, we know that bringing the guy up from the States means that they're going to probably be very U.S. growth-centric.
Right.
Does TD become any more attractive to you because of that?
We have a position in TD already. Just relatively speaking, we highlighted BNS. We like the Canadian banks. We think that it's got a good yield support. Again, we're talking about the dividend yield. They've been conservatively managed. The housing could be an issue, but I'm sure that that'll be hedged out. And so we're still there. We have not moved away. We also have the U.S. banks, though, at the same time. Financials is a fairly large portion of our weight, but it's diversified globally.
Enbridge is also a stock you favor right now. Do you favor it over TransCanada?
We have both.
Mm-hmm. So then why does Enbridge stand out for you?
It was when I was talking to them. It looks good for us on all metrics, technicals as well. And so, you know, conservative, same type of theme. Not
based on the prospects of new pipelines being built, just based upon what it's already doing.
Yeah, it's just an existing position of ours for a long time now.
Diana, great having you with us. Thank you.
Thank you very much.
Diana Avigdor is Vice President and Portfolio Manager and Head of Trading at Barometer Capital Management.